Good morning to all of you from Scotland in the United Kingdom, and good evening to those of you watching in Australasia. Already coming to the end of your day, just as it's beginning for me here. That's, of course, if you're watching in real time and not catch up, which I know many of you will be at some point in the future. Welcome everyone to this Chartered Banker Institute webcast, and to our members across many time zones and countries, you are all very welcome. And to our colleagues joining us from FINSIA, a very special welcome. As we gather today in mid-September, it is 18 months or more since the global pandemic began and became a leading matter internationally. Sadly, approaching 4.6 million souls have died, with COVID as a direct or indirect contributor to their passing. Here in the UK, there have been 134,000 deaths, and with a significant proportion of the population vaccinated now, the government has opened the door for those aged between 12 and 15 to be vaccinated with parental consent. That was announced yesterday. Whilst also we expect more news today that those over 50 might well receive a booster jab as we go into our autumn. The flu season in our part of the world awaits. Now, in Australia, there have been almost 1,100 deaths. Local lockdowns remain a significant feature. Winter is over, and we will ask, what next? Tentative steps out of lockdown, perhaps, in the various states. But just at the point where economic growth, from where I'm standing and looking in on Australia, looks to be faltering slightly. Now, you will know better than I down under that banking is dominated by the big four, with challengers making inroads. Our guest is right in the midst of that. And I also note that Revolut, our fintech organization, is also applying for an Australasian banking license. So the game is afoot, as Sherlock Holmes once said, although he was a fictional character. My guest is very much in real life. Also, with an Australian set of glasses on, the Chinese economy, which might be slowing, is also in the mix, significantly so for those of you in Australasia. Just as commodities like iron ore, coal, minerals are crucial, as are Aussie wine, and selling of tertiary education services to international students arriving in Australia. And of course, in the face of climate change and that green debate, what next for the oil and gas sector perched off the west side of Perth? During the course of the next hour or so, you can post your questions and comments, and as we go along, I will aim to try and play those in and deal with them as they come. And Heather Marsh is on hand from the Institute to deal with that. So if you have something you'd like to ask or play into the equation, I will do my very best. I can't guarantee. And of course, a quick reminder, if you're watching and catch up and we don't answer your question, well, you'll understand why. Joseph, today we are going to look down under, and you are a practitioner in the Australian marketplace, a practitioner with large bank experience, challenger bank experience, and in days gone by, a gifted footballer in your native Scotland. We could do with your talents these days, Joseph, although the win over Austria raised the nation's hopes just a few days ago. Now, Joseph Healy is a long-standing professional banker and a fellow of our institute, along with a fellow of FINSIA. He's an advocate of lifelong learning, and when you look at his CV, it tells you he really walks the talk. He holds a Master's in Finance, an MBA, a Master's in International Management, and an MA in Contemporary Chinese Studies. He's a published author of 3 books, not just a fluke then. And of particular interest is the post-financial crash of what went wrong around 2008, 9, 10 and the impact on Australian banking. And he also looked at Chinese firms going global. Can they succeed? Well, I think we probably know the answer to that question already. He was also, because of that football interest, previously a director of Football Federation Australia and is currently co-head of Judo Bank in Australia. Joseph, good day to you. And I say it as a Scot with a dreadful Aussie accent. And thank you for joining this Chartered Banker webcast. Let's take stock of where Australia is right now from a health perspective. It seems to me, looking in, that there has been a perpetual lockdown as the norm. And I know that there are differences from state to state, but for those who are not in Australia, perhaps you could just give us some context of where that's at.
Yeah, well, good afternoon and good evening, Bill, and to everyone listening. Well, most people will know, of course, that Australia is a confederation of different states, but the majority of the economy sits on the east coast in New South Wales and Victoria, but a significant part of the economy sits on the west coast too, which is largely a resource-driven economy. Now, the story of Australia has been that the west side of Australia, the west coast of Australia, has been largely unimpacted by COVID. It's almost built an iron curtain or an iron wall around the state, which makes it difficult to get in and difficult to get out and get back in again. So they've done a good job when it comes to protecting the community from COVID. When you look to the east coast, and let's start in Melbourne or Victoria, which is the second largest economy in the country, it has been plagued by COVID right back to March 2020. It took a very aggressive lockdown approach right through to August, September, in fact, close to October last year, and then gradually started winding that back, but with a stop-start series of lockdowns, which made it really difficult for businesses to kind of plan anything. And then if we kind of look at where we are today, we're in lockdown number 6, which started in early August and is likely to run through to end of October. I mention, just as an interesting fact for people listening, around about the 23rd of September, when Melbourne will still be in lockdown, Melbourne will overtake Buenos Aires as the longest lockdown city in the world. In other words, more lockdown days than any other country. That'll be over 240 or thereabouts lockdown days. The story in New South Wales, whilst quite a concerning one today, has been historically less of an issue. But New South Wales is now and Sydney is in its 12th week of lockdown, and that's likely to continue through to mid-October. So quite a serious lockdown situation. Queensland, on the other hand, has been in and out of lockdown, but nothing prolonged and nothing too serious. The light at the end of the tunnel, Bill, is that we are aggressively pursuing vaccinations now, with a rather casual approach to that whole topic up until recent months. The national stats are around about 45% of people have been fully vaccinated, and I think that's true of Sydney and Melbourne, with give or take 1 or 2%, with about 70% of people having had the first vaccination. The New South Wales government has said that it will start to loosen and open up the economy when it gets to 70% of people with full vaccination, and that's targeted for mid-October. The Victorian government has still to declare its position. It'll do so on Sunday, but there is a debate whether 70% is the right number or 80% is the right number. But the good news is that there's now some urgency around vaccination, whereas I mentioned up until recent months, frankly, the whole communication, the whole public policy context setting was really disappointing and confusing. What we had in Australia is just mixed messaging. We had the Prime Minister say 4 or 5 months ago, there was no urgency to get vaccinated. And then you had the government in New South Wales or the government in Queensland saying, we're not going to vaccinate people under a certain age because we're concerned about AstraZeneca, or we're concerned about, and so of course people hear this mixed messaging and they will hold on. We can't, the politicians, our leaders can't get their act together. What should we do as individuals? So that's been a disappointing part of the narrative. But as we stand today, thankfully, a lot more clarity and a lot more focus on getting those vaccination rates up so that we can start opening up, and hopefully late October, early November.
So you're not alone in that the UK, being this collection of different home nations, has had precisely the same issues with politicians in Northern Ireland, Scotland, Wales, and England doing different things, and some rushing ahead to do things ahead of others, and everything else. And we even had different 3 phrases of, for staying safe, and some said, stay awake, I think it was. It's so confusing, who knows? All sorts of different regional and home nation variations that caused real political furore here. We're still, we have a very high vaccination level across the UK, but it belies the fact that within those averages, now averages are always dangerous things. We have socioeconomic groups who are not as well vaccinated as others. We have ethnic groups within the country who are not as well vaccinated as others. Younger people, for instance, they've been told throughout that they run very little risk, so why would they? Until recently, where they said, oh, you might need a passport to get into a nightclub, and funnily enough, they were then all looking to be vaccinated. I suspect that was a nudge strategy, as governments like to use nudge strategies. As we look in, just the stark difference, 1,100 sadly deaths in Australia versus 164,000 in the UK, therein lies quite a tale. That's the health cost of it. What has it cost the economy, though, in terms of just the general state government costs and whatever? Has it been better than ours? We're probably at 350, 400, 500 billion of spending and quantitative easing that you've never seen before, and we'll come on to that in a moment. So where has all of that been? Is it almost saving lives at any cost, or what's the sort of the political will been?
Yeah, it's a great question, but if I can just pick you up on one point, Bill, the emphasis, of course, has been on the physical health of the community. There has been very little weight, emphasis, or analysis placed on the mental health costs of the lockdown, and they, whilst I can't point to any precise numbers, because so much of mental health goes unreported, you can confidently say there's been a material impact on society. And I would hasten to say no family would have escaped some form of stress, fatigue, depression, and a potentially lifelong lasting consequences attached to what we've been experiencing over the last 18 months or so. So that mental health aspect is going to be part of the post-mortem, if you will, in the years to come, when we start understanding how people have reacted to this. On the economy, Australia has had a reputation, if you will, as being the lucky country. And I would say that relative to most other developed, if not all other developed economies, perhaps take New Zealand out of that for a second, Australia has performed remarkably well economically. We had a technical recession late last year, but the economy bounced back. The demand for natural resources continued to underpin economic activity. The fiscal balance sheet was in a really strong position coming into COVID. I mean, there had been decades of conservatively managed fiscal position, which left the government debt from memory, it was around about 30% of GDP, which compared to any other major economy is a standout position. So the government was in a really strong position to spend. And that's what it did, in my view, to its great credit. I mean, it launched a whole series of initiatives of stimulus into the economy, targeted job-keeping stimulus, support for businesses through different loan schemes. The Reserve Bank, like other central banks, flooded the economy with quantitative easing. Interest rates dropped to all-time lows. And as a result of all of those factors, the economic impact of COVID and up until recent times has been really quite modest. And the economists have been forecasting quite a strong rebound in the second half of 2021. Of course, we are in a situation now where two of the largest economies are in lockdown. And so, you know, the bounce back that we were expecting has really been postponed, not cancelled, but postponed or deferred into 2022 rather. And we continue to look at the economy and the prospects of the economy with the degree of optimism, given the resilience of the economy and the strength of the government position. So we're not overly concerned about medium-term economic outlook, grappling with the short-term impact and particularly making sure that the small business economy survives as best it can. But it is one part of the economy, the butcher, the baker and the hairdresser, that we're really worried about now, because this is, particularly in Victoria, because it's just dragged on and dragged on and dragged on. And this fatigue factor has been huge. And when it comes to small businesses, and I'm going to put a psychologist hat on here, when it comes to small businesses, I think a lot of small businesses, as with a lot of people, have used this whole COVID period to reflect and to think, and have convinced themselves that maybe it's time to change. The things that we've been doing for the last decade, running the small business and eking out a living, maybe it's time to stop this and to pack up and go and live in another part of the country, and just change lifestyle. And I think that we'll see that in a lot of businesses, because I can't imagine that there are many of us as individuals who haven't thought about the future and said, do I really want to keep doing this? What changes should I make? I mean, for example, I'm expecting that when people can actually get out of Australia, because people have not been allowed to leave this country, or Australian citizens have not been allowed to leave this country for well over a year, that there's going to be a queue. I mean, forget a mile long, there's going to be a queue that'll queue for months to jump on a plane to get out and enjoy other parts of the world, because it's been a really difficult time. So, the economy will continue to adapt. There are sectors of the economy that I worry a lot about over the next couple of years. You touched on education. Higher education has been hugely dependent on foreign students, particularly Chinese students. That market isn't going to return to where it was pre-COVID. And I think that whole higher education sector is facing structural change. Now, it isn't a sector renowned for agility and adaptability, but it's going to have to embrace those concepts to survive. Because the government, I don't see a government here that is overly enthusiastic about putting more money into a sector that considers itself immune from forces of change. On the question of China, it's a big concern when you're sitting here in Australia. It's a concern not just from an economic perspective, but from a geopolitical perspective. Australian-Chinese relationships are at a 40-year low. I mean, the relationship started to improve back in the 70s. I think Gough Whitlam was the prime minister then, but it was when Deng Xiaoping was opening up the Chinese economy, and Australia was at the forefront of building good relationships. Those relationships have deteriorated. Winemakers, dairy product, Farm products is finding it really difficult to get access to a market that it depended on. Demand for natural resources is weakening as the Chinese economy weakens iron ore and coal. So, business people kind of in Australia, look to the political leaders and say, please don't allow geopolitical arguments to deteriorate to such a level that the economic relationship becomes unsustainable. And that really, for the first time in a living memory, is now a real issue. Even though it's been bubbling away under the surface for a couple of years now, it has certainly become a lot bigger an issue today than it ever has been, and concerning because the political rhetoric just seems to deteriorate.
Yeah, so pre-COVID, I mean, there were the sort of the signs of unraveling around industrial espionage, piracy of software, bits and pieces here and there just of sniping, and the 9 dotted line, the 11 dotted line, the South China Sea, and all of those things, which I'm not dismissing at all, but that all adds to the jigsaw that you face. You mentioned about mental health, which I think we can echo in the UK. It's the unseen damage. We don't really know where that's got to. Secondly, the UK Conservative government has had to raise taxes. A government a political party that is the party of reducing taxes, raised national insurance, which is a kind of income tax here, by 1.25% for the employee and 1.25% for the employer, to raise additional money for care. It will pretty much all be chewed up by the NHS because we've got waiting lists caused by the pandemic, and there were waiting lists ahead of it, where people are waiting on operations and routine things, some less routine. Those haven't happened. And then there's the real medical concern about undetected dread diseases. Undetected cases of really awful things that have gone for 18 months, 2 years without anyone presenting themselves, or whatever it may be. So I think we have that. We also, it's a completely different, it's a juxtaposition to where you are. The debt to GDP in this country blipped at about 106%. Over the course of the last few months. So we did not come into this pandemic with a low debt threshold for government. And they've had to go out and pretty much raise tax. They've had to go and raise debt, as tax receipts have been deferred, clearly, as we brought to bear a number of the initiatives that you talked about too. We don't have the resilience of a commodity market, raw material market that you've benefited from. Just as a sidebar to that, though, on Western Australia, over in Perth, and I know it quite well, the energy market there, how does that get squared away with the growing rise of climate concern? We've got climate protesters gluing themselves to bridges in London this week. We've got COP26 coming to Glasgow in a matter of weeks' time. The Norwegian government has changed overnight to be more centre-left, and it was all fought pretty much on the oil economy, given that's an irony, given their sovereign wealth fund is built on oil and gas. So just as a sidebar, for those who are interested in that Western side of your economy, because you've got very different economies within the entire nation, what do you see being the pressures on that energy sector space, which has almost had a free and clear run during COVID, because oil prices and gas prices have been rising significantly?
Yep. Oh, and this is true also of the coal sector, with the coal industry, which is also quite a significant part of the Queensland economy. The political enthusiasm for embracing climate change is out of step with societal sentiment, if I can put it that way. I mean, the political rhetoric is that the science is unproven. I mean, this debate, you might shake your head and say, surely people are still not arguing about flat Earth. But people are still arguing about flat Earths and saying, what climate change? Or the impact of Australian emissions is minuscule relative to other parts of the world, and why should we be seen as one of the leading nations in terms of climate change policy. Now, this is all driven by local politics and economics. The risk of losing political support by closing down or putting costs on industries like coal, like iron ore, is just something that the Australian political system just doesn't have the appetite for. I mean, we did see that during the leadership of Kevin Rudd, when he tried to introduce a resource tax. Yeah. And boy, did he leave with his tail between his legs very quickly afterwards, because the whole power of the industry and the media went after him. And I think it would take a very brave political leader to start talking about imposing climate change policy to the detriment of strong industry forces, even though the societal view is very much, I sense, aligned with where it is around the world, that people are concerned about climate change, particularly not just the younger generation, but the younger generation, certainly call it the under 30s, if you will, see this as a big issue, and Australia is no different from anywhere else in the developed world. But there is no political enthusiasm for it, and industry groups that would be weakened economically by a stronger climate change policy are very strong. That's a reality, no matter which way you want to cut it, it's a reality. The thing that disappoints me is that we're having a debate on whether climate change is real or not. And I mean, let's get beyond that and have a debate that says, look, climate change is real, but we can't afford to embrace climate change policy as aggressively as other countries would want us to or ask us to, because of the economic and social costs in some parts of the country. That's the real debate, but it doesn't get framed in that way.
And given that you and I are both 30 or under, we are as equally concerned about it, Joseph. I say that tongue in cheek, and at the risk of being thrown off. The other thing we forget at our peril is that politicians' core business is to be re-elected. That's the be all and end all. You can't be a representative if you're not elected. So I think you're echoing the position where people point to China and say, nearly 10% of global emissions, and maybe even more, that we know about. They should be doing something. Their view as well, particularly in Britain. What are you talking about? You had your go in the 1870s to 19, whenever, where you burned everything that moved to generate the economic powerhouse of what was an empire at that point in time. So there is all of that going on. But you're right. The debate of, is there a climate crisis or not, it seems quite fatuous, really. It almost reminds me of conversations that were had with tobacco companies in the 70s, and all of those sort of things. So if we boil all of that in to the likely import-export position for the Australian economy, it sounds as though you really need the domestic-based economy to get firing again, as in hiring people, but firing on all cylinders, because the export markets, particularly China, might be softening. So you are going to have to find that counterbalance. We have probably approaching 3 to 4% inflation arriving in the UK quite soon. Just simply because of energy prices and a whole raft of other things. I don't imagine you'll be any different because food prices and everything else are going up. We will have about 7% of the working population unemployed. So I think that we are going into a concerning time for bankers, particularly given the stretch and what I would describe as perhaps an asset inflation. Particularly around home ownership in this country, where house prices in the last year or so, as cities become places that people are walking away from to live in the countryside or more rural areas, they're buying houses, whatever. It seems the mortgage market here has been going great guns. Talk me through where you and colleagues are seeing the Australasian market around asset bubble inflation, and then we might get on to where that could take us, perhaps.
Yep, great. Happy to do that. Can I just go back, Bill, and just add a footnote to my comment on climate change? I said that the political system was not really, didn't have an appetite for change. What will and what is driving change is the investor market. But investors in the major banks, for example, are putting huge pressure on the banks not to finance climate damaging projects or to finance businesses. And of course, the whole ESG emphasis that is now just part of the way that businesses think. You can't go to speak to investors or go to an annual general meeting without having a very clear ESG policies. That's where I see change occurring. Now, on the question of asset prices, which is a great question, we look at the housing market in Australia, and I certainly look at the housing market with a great deal of concern about the potential for an asset bubble and the consequences of that bubble getting out of control. Now, housing prices in the major cities have increased about 20% over the last year. Average house prices in Sydney and in Melbourne are north of $1 million. Average incomes in those cities are about $80,000 to $100,000, just to put some context around it. When people are taking out mortgages, the stats over the last year is about 30% of mortgages have been taken out at levels that are about above 6, sometimes 8 times your net income, with relatively low deposits. The banking system has been very accommodating in lending to those borrowers, not just the banking system, I should say, because one of the big concerns here, and I think globally, is just the growth in the unregulated financial system, the non-bank lenders.
Shadow banking, the shadow banking.
That is big. And it has a higher risk appetite than the banks.
Yes.
Of course, it tends to hit that segment of the market that the banks won't play in. But of course, we have contagion effect. If you get it, when problems start to occur, they're not isolated. So the housing market is a real concern. Now, for those outside Australia, the total stock of bank lending into the housing market is about it's getting close to $1.9 trillion. That's in an economy GDP of about $1.8 trillion. Now, just by way of contrast, the amount of bank lending into the business community is sitting at about $750 billion. So $750 billion to business, close to $2 trillion to households. And this is an economy of 25 million people, so you can do the math. And if you take away those under the age of 18 and those over the age of 70, let's say, there's a lot of debt. There's a lot of debt sitting in the economy. And a lot of that speculative debt, because about 30% of house or mortgage lending is into the buy-to-let market. The Australian psyche, and this is not unique to Australia, but the Australian psyche is that the housing market is a one-way bet. We've not had a major property market correction here in 30 odd years, I would say. I can't think of one the last time we had it might have been back in the early 1990s. So people see this as a one-way bet, and they say you got to get onto the housing market, borrow as much as you can, go to brokers, and brokers will help you get access to the loan. This is a big worry because, as I say, you can't look at the housing market or bank lending into mortgages without looking at the system in its entirety and the risk of contagion, of a spillover effect of correction in the housing market spilling into in fact, I don't know many SME business owners that don't have at least 1 or 2 investment properties.
Yeah.
It's a way of diversifying personal wealth. You build up your baker or butcher and candlestick maker business, and you say, right, let's borrow some money to buy an apartment. let's borrow some money to buy a house we can let out. That is a big worry. And I sense that we might see some regulatory intervention in lending into the housing market in the not too distant future, because it's just far too hot. Other asset classes fall into a similar category, Bill. I mean,
Joseph. Yeah.
I mean, equity markets, for example.
Yeah.
Very similar. Everybody said the equity markets globally are overpriced. So we are in a stage in the economy globally where asset price levels have just seemed to have lost touch with reality.
Yeah, the US marketplace with several $1 trillion being poured in QE, that money chasing a return. What could possibly go wrong when the liquidity cycle ends, as inevitably it will have to. And the Fed in the States is already talking about tapering and reducing the QE and everything else. However, it seems that everything's okay. You just look at the indices and it all seems fine. Arjun Chadha has sent in a question that's on this topic, Joseph. In Sydney and Melbourne, CBD and inner city real estate, I'm told is mostly driven by Chinese students. So how will that thesis of a lack of Chinese students coming to study in Australasia and specifically in Sydney and Melbourne, how will that impact? I mean, rental yields are low in Melbourne, and how's that going to play out? And is there a difference between the established Big Four and the new banking model? Is there something at play here that those of us on this side of the world aren't seeing because it's a local phenomenon?
Yeah, it's not a question of the banking model. I think the question of inner city apartments is a great question, because a lot of inner city apartments have been built certainly in the major cities in anticipation of students or foreign students coming to live. And also in the case of Chinese people in particular, there was a lot of property purchases by Chinese wealthy Chinese people to have a place outside China and parks to live in if they needed to, and to employ some money outside of China. Now, of course, what's happening in China is well publicized in the media. The leadership of the Communist Party has been quite clear about wealth redistribution and about really moving in on levels of wealth that people have accumulated and going back to traditional socialist principles. And that's got to have, and the ability to transfer money out, of course, has been a challenge for some time. Now, I've got an apartment in Melbourne. When I'm in Melbourne, in the CBD, on level 23, where I'm on, there are 8 apartments, and I'm the only one living in an apartment, and that is true of other floors in the same building. And most of the owners are Chinese. And most of the occupants up until a year ago had been Chinese students. So it's a big issue because who's going to replace those students at a time when people are actually moving out of the cities, as you mentioned, Bill? People who don't have to be in the city, and now because of new working habits, 2 or 3 days a week from home, for example, why not live 50, 60 kilometers and get a decent block of land and live in the country rather than the hassle and hustle of CBD? The other big issue in CBD, and it relates to this problem that we've just been talking about, is commercial property and office space, and the demand for office space. There is no question in my mind that we have seen a structural shift in the demand for CBD commercial property, office space in particular. It's very hard to see us returning to a world that had anything like 75% occupancy. I mean, most businesses that I talk to are planning on maybe 50% of people being back in the office at any particular moment in time, but really adjusting to a working habit of 2 or 3 days in the office, maybe 2 or 3 days at home. And that's going to be the new norm. There is no going back to the old way of doing things. And therefore, all of this office space that you see around in most CBDs, what is that going to get used for? It's not going to get converted into accommodation because the demand
because there's a glut. There's a glut, yeah.
And so this is a big issue. It's how does it correct itself?
Yeah. So the UK situation is quite different in that in London, more than 500,000 people have moved out of central London. And that's exactly as you've described, moving out to greener spaces with more space, knowing that they don't have to be in the city for 70, 80 hours a week for 5 days, 6 days, however, especially in the professional services firms. And many of them are changing working practices. One or two have said get back to the office, but the majority are listening to employees. I know from executive search in the UK, they're talking about 2022 being the year of the great resignation. And that's probably in line with your view that people are taking stock and thinking about what's this all about. And also Pret a Manger, which is a sandwich chain in the UK with Bloomberg, have an index of footfall. And zones 1 and 2, which is central London, the city and Canary Wharf, they're at 57% roughly of pre-COVID levels, whereas their outerlying areas are the only ones that are slightly above pre-COVID levels. So that's a sort of southeast of the UK specific. In Scotland, it's very different. Edinburgh is quite quiet. I mean, almost a ghost town in some parts. And there is a mass conversion now of some really old properties that were offices into what they were originally in the 1800s, 1790, 1800s, back to domestic dwellings. So that is going on. And I think in London, they will probably repurpose a number of office buildings into personal accommodation simply because we have such a shortage. But you've described a very different position, especially in those large cities, that there's already a glut potentially of domestic dwelling property. Let's look at, we talked about the Australasian overall balance sheet, and going into this pandemic, it was in good shape relative to the UK, I should say. Post the 2008-9-10 financial crash, there was a wholesale recapitalization of banking balance sheets. Where will banks begin? And I'll describe it as the new normal. We're not going to go back to the old normal. Whatever this new normal is, where do you see bank balance sheets being at the beginning of 2022 versus the pandemic point?
Well, I think, the story of the Australian banking system from the global financial crisis right through to today is one of being very strong, well-capitalized banks. I mean, some of the weaknesses that the banking system had back at the global financial crisis, which essentially was an over-reliance on short-dated wholesale international funds, that's been corrected. The regulatory requirements around stable funding indexes, etc., have been well and truly well managed. The banks are well capitalized. From a balance sheet and from a profitability perspective, they hold up well against any banking system in the world. I mean, I think along with the Canadian banks, the Australian banks are amongst the most profitable banks anywhere in the world, still making low teens, in some cases mid-teens return on equity, well-funded. So, that one of the things that has been a positive about the banking system in the context of COVID is not only has the government balance sheet been strong and able to fund and provide support to the economy, banking balance sheets have been very strong and able to provide support to the economy. So I wouldn't criticize the financial profile and management of the banking system here, because it is, when you compare it to anywhere in the world, it's right up there amongst the best. The criticism, as you know, of the banks in Australia has been much more about conduct
Yeah.
reputation, an aggressive, overzealous approach to the household sector, and a neglect to some extent of the SME sector. But it's not been around the financial strength. The banks are viewed here as being not necessarily well liked or highly trusted, but regarded as very safe and well managed in a financial sense. And I don't see any change there. I think that when we go, the banks have been, over the last couple of months, have been announcing higher levels of dividend, and some banks have been doing share buybacks. So the capital profile of the banks here is a badge of honor, I would say. Now, yeah. you touched on the question of the challenger banks and the fintechs earlier on, and of course, as the CEO of a challenger bank, we are right in the middle of how the banking system is changing or trying to change. We have not had huge success, I have to say, with newly licensed entities. Back in 2019, or just over 2 years ago, the government, or the regulator, issued 4 new unrestricted banking licenses, of which one was issued to Judo, and the other 3 were kind of neobank online retail or consumer finance-based players. Now, of the 4 license holders, 1 has handed its license back because it failed really to get the capital it needed and build a viable business proposition. Another one was acquired by one of the major banks, so it's now a subsidiary or an integral part of the major bank, so it's not challenging the status quo, it's now very much part of the status quo. And the third one is still really working on launching its business proposition. Whereas Judo, which is a pure SME-focused bank, we've done well. We've got a balance sheet now of lending north of $4 billion. We've got 330 odd staff around the country, profitable, expanding, even considering going to the public equity markets, which is something that we're looking at doing potentially near the end of this year. We've raised over $1.2 billion of core tier 1 equity, strong investors. So the reality is that there's opportunities to grow alternatives to the incumbents, but the barriers to entry are high. And what I say to people who ask me about, well, what are the critical success factors of entering the banking system in Australia? I talk about the 3 must-haves, the non-negotiable must-haves. The first one is that you must have a clarity about capital over the first 4 or 5 years of the business model. Not the first 6 months of the business model, but you've got to determine how much capital you're going to need and then talk to investors about that at the beginning. So we said we needed $1.5 billion, so people who invested in Judo 4 years ago knew exactly what they were investing in. Whereas others come to the market and say, can I have $20 million? And then 6 months later, they come back for another $20 million. And then it's just a long drag, and it's not successful. The second must-have is you've got to have a very clear and sustainable competitive advantage. What is the problem that you're seeking to solve that the market doesn't solve today? And some of the models that I've seen, it's not clear to me what their competitive advantage is. And the third thing is you've got to have deep management bench strength, people who actually understand how banking works, from the A to Z of how to build and run and manage risk. Yeah. Not one individual or 2 individuals, but you've got to have bench strength. And when I look around the world at new banking models that have failed, it's largely because there's been a weakness in at least one of those 3 must-haves.
So those 3 pillars that you talk about, I mean, if we go back to the financial crash of 2000, limbering up in 2007, 8, 9, it strikes us as just so basic that banks forgot that lending short and borrowing long wasn't a terribly good idea. And that if there was a run on your bank, whether it's Grindlay's going way back in time or the secondary banking crisis in the UK in the 70s, if you're borrowing short and that dries up and you're lending long, you have a problem. Just a technical question. You would describe your bank as a challenger. I maybe put that word in your mouth. What, for our audience, is the difference between a challenger and a neobank in your mind? Or are they the same?
No, I think the different business models. A neobank is bringing largely a technology or a digitally enabled proposition to the market. A challenge, and so doing something different than what the market offers today. A challenger bank is almost like an insurgent. It comes into a market that's dominated by giants, if you will, and it tries to take them on at their game using a judo strategy. So the genesis of the name of judo comes from judo strategy, which people can Google. But essentially, judo strategy is coming into a market dominated by giants and using their strength, their size rather, and slow-moving, cumbersome, complex systems against them by being agile. So it's playing them at their game, knowing where the soft underbelly is, and going for that soft underbelly. So I call that challenging the status quo through innovation, but not trying to kind of build a whole new market. I don't think banking, there's a lot of new innovations in banking, which is great. There's scope for a whole lot of new business models, more specialist business models. You mentioned Revolut as one example. There are many others that come in and attack certain parts of the value chain. And that sort of innovation is fantastic. But we're coming into a traditional market, which is the SME market. We're coming in with a traditional set of values, which is a relationship-centric business model, but it's built on modern technology. So it's a high-touch, high-tech model rather than a high-tech model, which doesn't have that human interface. So I see the challenger model as a fundamentally different model than the kind of neobank model.
So it's a speedboat against oil tankers, whereas the fintechs are coming in with a different kind of vehicle completely. They're saying, does it have to be a boat? It could be something else. That's a dreadful analogy. So I apologize to the global audience for that. As I was saying it, I thought, where are we going with this? That was absolute nonsense. But never mind. Joseph, you've been very generous with your time today. Thank you. We are drawing to the close. Just the final question for you before I wrap up and let the Australasian gang go and have some dinner and the UK gang to do whatever they do. I'm going to have some porridge just to make you feel sad for the old country, Joseph. Looking ahead, we've looked back. Looking ahead, if we were to line up this conversation in a couple of years' time, what do you think will be the abiding, important stop, think moments for you as an individual? Because you are a professionally qualified member of our institute. We are a membership organization at the end of the day with 30-odd thousand members globally. What advice and what snapshot would you be giving to those of our members who are perhaps 10 or 15, maybe even 20 years behind you in their professional journey at this point in time?
Oh, yeah, great question, and easy one for me to answer. And it's understand the history of the industry, because one of the things that never fails to amaze me, and I see it today, is that the corporate memory inside the industry is very short. And it's staggering when you think about the number of crises that the industry has faced into, not just one that's only 10 years or so ago, but the industry has an amazing capacity for convincing itself that this time is different. And they are the most dangerous words in banking. So understand the history of the industry, because banks don't need to find new ways to go bust or get themselves into difficulty. They have a history of doing that. And the same old mistakes get made.
Lend money to the wrong people.
The same old mistakes get made.
Yeah, well, that's always wise words for those in our profession. And from an institute perspective, our partnership with FinSA is hugely valued from here in the UK. Our view is that professional bankers should populate our profession. It's as simple as that. They should have a real strong look to what went before them. When I was elected president of the institute a few years ago, and I'm now past it, president, I think is the term they use. There is on the wall of the outside of the committee room a certificate which was given to one of the very first banking apprentices in about 1875, and it talked about stewardship, good stewardship, which is a very Scottish concept, so it won't be lost on many of you. And that translates into a modern version of responsible lending, where everything you are doing as a professional is about making sure there's something left for the next lot. It's not about transactions, it's about relationships. So Joseph, we value our relationship with you. We value the relationship with the gang in Australia. So in reaching the end of our time today, I'd like to thank the Chartered Banker Institute team for putting this broadcast, or this recording if you're watching it later, together, particularly Heather Marsh, for doing all the technical wizardry and making it happen. For those who are logging CPD these days, this will count towards your annual hours, so it hasn't all been in vain. Well done if you've made it to the end of the programme. In the immediate future, for those who want to tune in, I'll be interviewing Sir Peter Wall, who's the ex-head of the British Army. We'll be talking about leadership and discipline within military and how it might apply those leaderships to banking. I'll also catch up quite soon, next month, I suspect, with Alex Sanchez, who's the CEO of the Florida Bankers Association, to get a unique view of Main Street v. Wall Street, which is the big thing that the Americans talk about from their regional banking model. But for now, Joseph, I should say thank you very much indeed for your time. As a chartered banker and fellow of our institute, we are grateful to Joseph for his time, insights and advocacy. And to colleagues in the early part of the day, I wish you a good one. And to friends and colleagues down under, the rest of the night is your own. But in closing, there is an old Chinese saying, may you live in interesting times. And I think that is alive and well among us as we've gathered today. My long departed grandmother, who was born in 1900 and saw a lot of change, used to say, everything will pass. And indeed, our time has done just that. So join me in a few weeks' time for more insights. That will all be publicised via the Chartered Banker Institute media channels, etc., and will be brought to you by your friendly Chartered Banker Institute. So until then, the important message is stay well, be careful out there. And from Scotland and Australia, goodbye.
Bye.